In with his view on the macro situation. Paresh, good to have you on the show. Yields have cooled off to 4-week lows post the announcement of OMOs by RBI. How positive is this announcement? Is it as per market expectations?
Yeah, the market expectations, I think, was not that the way the minutes have come, because last two times minutes had been a bit more hawkish than that what we have seen now. It's balanced views which have been expressed in the MPC minutes. That's what has been taken positively, and as a result, some market players have started expecting that which was earlier expected that, maybe there's a hike of 25 basis point in August itself. So there's expectation that it could be a bit postponed to October. And since RBI had mentioned earlier that they will be data dependent, and MPC members also are showing that they are data dependent. So there is a possibility that, the next rate hike might get postponed to October. That's why the market yields we have seen have been coming down. And let's see that how the sentiment really goes on a change. And if we can see the yields coming down further.
Paresh, what about liquidity though? And what is the expectation ahead from the RBI in terms of liquidity management, considering they were pretty quiet about it, I would say, in the last policy? While there was a reference to it, there wasn't really a method which they're going to adopt.
True, but I would give the credit to RBI in the last few years itself. If you can see that they have come out with liquidity management tools whenever we had excess liquidity, and that time when RBI was very active, and the CMBs, and the recent past also see that the CMB was issued when the liquidity was excess. Yes, after the advance tax outflow, the liquidity there has been a shortfall, and we saw the open market operation announced, and that auction will bring in 10,000 crores. So which also shows that RBI is proactive from that aspect, and they do have the tools to manage it. In case there is a further shortfall, they might come out with the OMOs, but this process of OMOs may be more in the second half. But now also we'll see that the money which will be collected by the government, that we should see coming back to the system towards end of the month and the first week of July. I'm sure RBI will be able to manage it well. And overnight rates are around the repo rate, maybe 5 basis point here or there, but it's well under control.
Okay, the currency weakness, how do you read into that?
Well, rupee, we do have a common factor in the fixed income and the dollar rupee, which is of crude oil prices. Thankfully, it has started coming down a bit, but today we saw the weakness of rupee also associated with the strength of dollar. Dollar is around 95.5. We saw the euro coming down, sterling coming down. So that also is putting pressure on rupee. On the other side, again, we have to be watchful on the fact that recently we had seen around 68.46. That level should get protected, and Reserve Bank is watching it very very closely. And we heard that they do periodically intervene in the markets to cool off in case there is sudden weakness in the currency. So I think they would be looking at how the overall dollar index is behaving, but they do not want too much of volatility. They will keep an eye on that. But in case the crude oil, after we're going to have an OPEC meeting tomorrow, and if there is some positive outcome of from the OPEC, and oil prices cool off, I think the pressure on rupee will come down.
Paresh, what's the view though on the 10-year yield and the short-term rates over the next 3 to 6 months? And what would you say would be the key events and factors that you would monitor which would impact the bond markets?
Yeah, 3 to 6 months nowadays is becoming a very difficult call anyways, the way we have seen the spike in the yields in the recent past few months. But on the other side, I think, as I mentioned, the crude oil is one of the factors. And then we are also waiting for the announcement from the government on the minimum support price. We have to see what sort of quantum they're going to come out, what will be the mechanism on that. And if there is some postponement, or we see that, it's going to be, it may not be causing that much of a pressure on the fiscal and also, as a resultant, inflationary pressure on the food inflation comes down in case they are bringing a bit lower MSP or they postpone a bit. So that will also be very critical to see that how much is the inflation pressure coming up. Apart from that, we have to also see that monsoon, which has started, so far it's being told as normal, but we have to see that we have another 1.5 months of monsoon. If that also is good, so the food inflation actually may not really go up as what the market would have expected. So these are the factors which will be dependent that, how much is the inflation pressure coming up. And since RBI has been always telling that they are data dependent, so that will also show that what could be the course of action. But I think immediately if we see that somewhere that mark of 785 is becoming a cap on the bond yields, but there is a potential that it may come down towards 7.5 to 760 level in the next 3 months or so. There is also a positive news which came that when RBI and SEBI changed the guidelines for the FPI investment, so that money also is sitting on the corners. So I think once some new announcements on the, or rather news coming from the OPEC comes out, so that we might see that money also coming into the market.
Okay, Paresh, thanks very much for joining us with your take.